Yo, what's up, guys? I just bought a dividend stock that has a near 5% dividend. It's actually the highest yielding dividend stock that I own. And I'm going to tell you why I trust my money with this company right here. And the sector that this stock is in is known to be recession resistant. So if we have a recession, this company will actually benefit from it. And the stock that I'm talking about is one that I own here in my Moo portfolio. I just bought another share of this company right when the market closed. But check this out. This is ticker symbol Cube or CubeSmart right here. We're going to be comparing them to their competitors, and I'll show you why I love this company specifically. They're doing way better than their peers. And look at the dividend. You get a 4.92% dividend. And it says the payout ratio is 120%. That's when you look at the EPS or the net income. You don't, if you know, for these real estate investment trusts, you don't look at the net income. You actually want to go down here and look at the core FFO. So anyway, I want to show you why I love this company. And if it does not impress you, feel free to hit the dislike button. Let me know why you don't like this one in the comments. I will happily reply to all of them. But check this out. I want to show you a few slides from their investor presentation. So look at this. This is their FFO. This is the number you want to look at, not the net income. You want to look at the AFFO. And look at this. Over the 1 year, as you can see, they do, whenever the sector's going negative, they don't do as bad, but whenever the sector's booming, self-storage is doing great, they actually perform better. So look at that. They grow more than their competitors and fall less whenever there's an economic downturn. But look at this right here. Look at their efficient expense management than all their competitors. Their competitors are NSA, EXR, and PSA. Those are the three big other self-storage names. And look at this. They actually are triple B rated from Moody's and S&P Global. And look at their debt to gross assets. Their debt is actually falling. So that's a great sign. Net debt to EBITDA is a 4.1. That's way less leverage than like a Realty Income, for example. And look at this. They have this third-party management platform where they collect this high margin management fee income. So that's what's pretty cool. They actually manage 902 properties and they collect 41 million of annual net income or annual profits just from managing those. And here's what the company just bought. They just bought the remaining interest. They bought the remaining 80% interest of this self-storage, like company. They owned a lot of properties. Look at this, 28 stores, 91% average occupancy rate. And the average year built of the property was 2017. So that's cool. They're acquiring new assets, which is great to see. That's some inorganic growth. Yeah, look at this right here. We can see their wholly owned stores right here. It's kind of just stayed flat for a couple years, but look at their managed stores where they collect high margin fees off of it. Look at that one. It just keeps on going up. And I bet you're wondering, why the self-storage industry? What's so great about this industry? Well, I cannot wait to share that with you. And here's why I like CubeSmart more than all their competitors. So here are all their competitors right here: Public Storage, Extra Space Storage, and National Storage Affiliate. And here's the market you want to be in, I believe. Look at the average 3-mile population density. I want to go where there's the most amount of people in the smallest amount of space because that's where self-storage is most valuable. And look at that. They're the highest out of all their competition. And that's because they're the market leader in New York City. Look at this. Literally 25% of your portfolio is just in New York, which is, to be honest, where you want to be if you or in the self-storage market, because look at that. That is the lowest supplied market. So this is what I really like about CubeSmart. You can see the average 3-mile medium household income. So they have pretty much the highest medium household income, which is pretty cool. And check this out as well. Here's another cool thing about the self-storage industry. Look, they actually have short-term leases. As you know, self-storage is usually month-to-month lease. And look what they say. The month-to-month leases allow for rapid repricing in response to changing economic conditions. So what that means in English is that whenever there's inflation, they can raise their prices instantly and capture that inflation. And there's a lot of fears recently around tariffs and war fears that's going to spike up inflation, and that would actually benefit self-storage. Now, if there is a recession, here's what's so cool about self-storage and how they're actually recession resistant. And again, this is from AI right here, but check this out. So whenever there's a recession or bad things happen, self-storage is actually here to benefit from this. And these are known as the 4Ds. Check this out. Whenever there's this word right here, whenever someone passes away, their belongings need to be stored somewhere. Whenever people get divorced, they have to store their stuff. Whenever you downsize, you got to move somewhere or you get a job somewhere else. When you dislocate, you probably got to get a self-storage property, which is pretty cool. But look at this right here. This was from 2008 to 2009, the huge recession. Look at this. Self-storage only fell 2.5%, but a lot of office properties, retail properties literally fell 40 to 50% and had a much higher default rate. And remember, Self-storage properties are profitable with like a 50% occupancy rate. And look at this, occupancy rate fell 6% to 88 to 82. So that's what I like. If there really is going to be a hard recession, I want to own self-storage over like office properties. So check this out. CubeSmart pays you 52 cents every quarter. So, that's just over $2 a year. We'll just call it $2.08 a year. And check this out. In the most recent quarter, again, you want to look at the FFO, the adjusted funds from operations per share, because it includes any shares issued. It was 70 cents in the most recent quarter. And again, that well covers the 52-cent quarterly dividend. Check this out right here. This is for the full year 2024. This is the main number we want to look at. And it was $2.79. And that well covers the annual dividend of $2.08. That's a very healthy, very sustainable payout ratio. And if we do this 279, and we can also do a multiple to see how expensive CubeSmart is trading. So the current stock price is $4.67, and we just divide that by the annual AFFO, which is $2.79. We should get a multiple of 14.9. So this company is trading at 15 times AFFO, which seems very fair. That's basically the same as like a PE ratio, because you don't look at net income, you add the depreciation because of all the tax breaks you get as a REIT. But yeah, that tells me that their dividend is very safe. Even if their AFFO falls a little bit, they well cover the dividend. And here are some of the benefits that AI says you get from owning self-storage. Stable income, month-to-month leases. You literally have their stuff, that they're going to pay, or else you just auction their stuff off and keep it. So they're incentivized to pay. And you don't have to worry about kicking out a tenant. It's not like an apartment building where you have to go hassle with all that. Maybe you have to pay someone, get the police involved. But it's literally a self-storage property. Low operating cost. It's literally just four walls, a sheet metal door, maybe a HVAC system, but there's not much maintenance to do, tax benefits. Obviously, since it's a REIT, they get to deduct the depreciation, the amortization and stuff. So, I mean, that's if you're an individual owner, but that's what's so cool about the real estate investment trust. That's why you don't look at net income. You actually go and look at the FFO, the core FFO. And there's also additional revenue streams you could have from a self-storage business. You can sell moving supplies, maybe tape, locks, stuff like that. And truck rentals, you put a U-Haul on your property, that'll make you a lot of money. U-Haul and self-storage are, tied together. So, and that's why a lot of people also don't want to stop paying for their self-storage unit. They have to go rent a U-Haul, lose a weekend of their time, go grab a friend and empty out your self-storage unit. So people just don't want to hassle with that. People are lazy. So yeah, but if you do have a little U-Haul rental or some kind of truck, you don't even have to have it a U-Haul one. That could generate some additional revenue. What I've seen some CubeSmart properties do, they actually put cell towers on top of their properties. They put billboards. They put solar panels up, so they can generate some money through solar panels. And the solar panels power the business, and then they just sell the extra storage they make back to the grid. And so I'll wrap things up here by going over a few highlights. During 2008, self-storage saw a 20% stock price decline compared to 50% office, 64% retail, 50% healthcare, 60 for industrial and residential. And it shows us like the individual companies right here. This was their approximate decline in 2008. And these are all like the leaders from the sectors, like Simon Property Group. I really like that stock. They're doing great. But yeah, malls, they fell 64%. Prologis fell 60% even. But yeah, that's what I like about self-storage. It's been recession resistant. And I believe whenever there's not a recession, when people are spending money, filling up their Amazon carts like crazy, people will still pay for self-storage properties. It does good whenever there's a recession because of the 4Ds, and it does good when people are spending like crazy. So self-storage pretty much does good in all times. Not financial advice, nothing in this video is. But yeah, here's kind of the conclusion for owning a self-storage business. Stable income, low cost, recession resistance, especially when you compare it to all the other REIT subsectors like office, retail, all these other ones. And the 4Ds ensure consistent demand. Again, those were, you know, I don't want to say the first word, but, divorce, downsizing, dislocation. Self-storage actually benefits from all this. So yeah, let me know what you think about this one. CubeSmart is the self-storage stock that I've chosen because I like their expense management. I like how they historically their AFFO grows more and it falls less whenever things are bad. So that's why I like CubeSmart. It might be biased because I own shares in them, but I like the 5% yield. The dividend seems very safe. Thank you so much for watching. Check out my last video up here, 3 high growth dividend stocks I just went all in on. I literally just bought all 3 of these dividend stocks in the past couple months. And also, please, I really hope you would drop a like on the video for me. It really does help me out a lot. I hope you have a great rest of your day. My name is Nathan Robert. Catch you in the next video.